Hello, hello. So today we are doing a trade recap. We are Monday, so again trade recap of the Nasdaq. So let's start. First, we start with my bias of the week. So my bias for this week is I'm not bullish, I'm not bearish. We are more in a consolidation phase. Oh shit! Wait, let me up execution. Okay. So all we can see. We have been in a consolidation for the past week, so I'm not bearish and I'm not bullish. When I go to the session, whatever the market show me the best, I will go for that setup. So if it's a short setup, I will go short. If it's a buy setup, I will buy. But depending of the premises that gave me the session before and the day before. So here what's happened. So here I came on the market on the 15-minute time frame, like always. 15-minute time frame, you can see that is the AM session. You have the AM session from here 9:30 to here 11:13. 11:30. Then you have the lunch session. So we can see that we had this buy side liquidity for the lunch session, and we had this sell side liquidity for the AM. But basically, if we are realistic, when you come to the market to this, not to yes to this, you know that the market will not do minus 1%. So that was so I already knew that the market will not go to the downside. So I was more for for a bearish mindset and a bearish position than a bullish. Then all we can see is that the AM went a lot to the upside. So as we knew that it went a lot to the upside, I was looking for going to the downside for the PM session. So what's happened is it took the buy side liquidity here. I went on the 5 minute. Okay, we have buy side taken. Okay, then I go on the 1 minute. So going on the 1 minute, we can see I came at around. I came and we can see that the market went up. Take this level of liquidity, then started to make. I always take position only during the macro. If it's not during the macro, I don't take it. So I waited for the macro. So at 1450, we can see that first of all, we had a SMT divergent with the US 500. That was a big confluence. So knowing that, we can see. So what's happened here is we have two type of trader. We have the one that will take that as a market structure shift, and the one we can take that. So me, I took this market structure shift and I waited from the retest. We had the retest of this order block. Then the market went down. No, yes, I take the trade based of this order block. Let me show. Okay. I take the trade around here when it retested this fair value gap and above we had the fair value gap, the order block. So basically what were my 3 PDRA? We had this fair value gap and I took a position based of it. Then we had this order block, that was 1, 2, and then if the market will go above this high, I will not see the market going below, and I would want to be out of the market. So during the macro, I took the position right here, but even if I would have missed the macro, we can see how the market during the 15 on 15 came again retesting this point. So I could take another position here if I would have missed this one. Same stop loss, same target. And even if I would have taken this position, I would have a better risk to reward. So, but that's not problem because I took the position during the macro, so nothing was wrong with it. Oh, then the market came. Then we can see it made this order block closing above, closing below. I knew that this order block going to be valid. It came to the downside, made another order block, retested. If I wanted to, I'm experimenting, so I'm not even demonstrate that stay breed. So I'm experimenting the fact that adding position to my winner, I could have had a position here one more position here. But again, and I aimed for a 3R. So usually when I don't have any clear target, I aim for a 3R trade. So I aimed for the 3R. If I wanted to, I could have aimed for the liquidity right here, or even this one. But the market closed. Yeah, the market, yeah. So I could have aimed for this liquidity, but as the market condition is consolidation, I wanted to be clear, to be sure, and I aimed for the 3R trade. So based of that, we know again the theory. When the market took a level of liquidity, it would aim for the opposite liquidity that is being left during the macro, during the last hour of trading macro. So here what happened? It took a liquidity to the upside, and then the last hour of trading, so at 15, it went to take the liquidity in the opposite side that it didn't took. So this one. So that was a good trade. Even in bad market conditions, we can take good trade if you follow your plan and you trust it. So that was it, and peace.